Welcome! In this video, ZBCN versus HBAR, which is better, and can ZBCN increase 3,300%? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
But first, let's analyze ZBCN.
When looking at the market structure from a broader perspective, it is evident that price movements have previously followed a distinct downtrend. This descending trend is considered a formation that investors closely monitor in technical analysis, as its breakout can provide significant signals. Especially in a structure where lower highs and lower lows follow each other, we acknowledge that the general market direction is downward. However, in technical analysis, it is not only important to recognize the current trend, but also to accurately analyze where that trend might end and where signs of change begin to emerge. At this point, an upward breakout of the descending trend line carries great significance. This kind of breakout often indicates that sellers are no longer dominant, buyers are re-entering the market, and with demand, prices may begin to reverse. In particular, an increase in volume following the breakout is one of the key technical arguments supporting that the breakout is not false and that a new bullish wave may be starting. With the breakout, the foundations for a new trend are laid. This is not just a short-term rise, but may signal a trend reversal that can develop over larger time frames. One of the most commonly observed behaviors after a breakout is a pullback of the price toward the previously broken trend line. This is known as a retest in technical analysis and is generally a necessary process for the market to absorb the new trend. During a retest, the price returns to the old resistance area, namely the broken trend line, and tests this level as support, which is considered a healthy technical development. This allows hesitant investors an opportunity to enter new positions before the price resumes its upward move. At the same time, strong buying pressure at this level provides a more solid foundation for the new trend. After the retest process is completed, the likelihood of the price moving upward significantly increases. The previous trend line now starts acting as support, which is interpreted as a technically reliable signal. From an investor's perspective, opening new positions or adding to existing ones becomes much more rational in such an environment. A breakout followed by a successful retest is considered a very strong bullish signal from a technical standpoint. An upward movement is expected to gain momentum following this signal. Especially if after this retest, the price begins forming higher lows and higher highs on lower time frames, it clearly shows the strength of buying pressure. This demonstrates that market participants have abandoned the bearish sentiment and adopted a bullish trend. These types of reversal structures in technical analysis give investors an opportunity to reevaluate their positions, set new targets, and update their strategies. Such a breakout also emotionally supports market participants, boosting overall confidence. When the price retests the broken downtrend, it's essentially asking past sellers, are you still willing to sell here? If selling pressure remains weak and buy orders come in strong at this point, the trend reversal is confirmed. This is a positive development not only for short-term, but also for medium and long-term investors. Especially descending trendline breakouts on higher time frames often go down in history as key technical developments that pave the way for broader price movements. It should also be noted that no formation or signal in technical analysis is sufficient on its own. However, descending trendline breakouts followed by healthy retests have historically signaled the beginning of many major price rallies. Therefore, it is quite natural for investors to adopt a positive technical outlook in the face of such a structure. If price gains upward momentum after the retest, both technical indicators and overall market psychology are positively influenced. Strong price action after the retest, increased volume, and upward signaling momentum indicators clearly show that the price has entered a new uptrend.
This presents a very strategic point for investors who missed the initial breakout to rejoin the market. Because for those who missed the breakout, a retest is often seen as a second chance, and positions taken at this level can offer highly attractive risk-reward ratios. Especially if this trendline has previously been tested multiple times and acted as a strong resistance, its breakout becomes even more significant. A trendline that historically turned price downward being broken to the upside is a clear indication that selling pressure at that level has been exhausted and buying demand has taken control. This also shows that the psychological threshold in the market has been crossed. Investors are now looking to profit from upward movement rather than downward. How price behaves at these critical technical levels draws the roadmap for potential future price action. In a scenario where the downtrend is broken, the retest is successfully completed, and an increase in price is accompanied by growing volume, all the technical conditions for a bullish move are met. In such an environment, targeting previous highs or even surpassing them is not only possible, but also technically expected. In conclusion, the upward breakout of a trend line that previously showed a downward bias and kept prices under pressure, followed by a retest, should be considered a highly critical technical structure. This structure is one of the strongest signals indicating a market reversal and the beginning of a new uptrend. Therefore, it is vital for investors to properly analyze such technical developments, shape their strategies accordingly, and manage risk appropriately. Especially the technical formations that develop during the retest process, the signals from indicators and the overall market momentum are key factors in determining whether this breakout is sustainable. But we can't rely on trend lines alone for analysis. Let's also look at other metrics. Stay tuned.
I'm interrupting the video for a moment, friends, because Bitunix Exchange has a great campaign. Here's how it works. After registering on the exchange via the link in the description and completing KYC, if you deposit $100 for your first deposit, you will receive a $20 bonus. If you deposit $500, you will receive a $100 bonus, and if you deposit $1,000, you will receive a $200 bonus. I think this is an excellent opportunity for leverage trading. For more details, you can read the articles below. The link is in the description.
According to the Elliott wave theory, market movements are shaped by recurring patterns of investor psychology, and this structure becomes especially evident in trending markets. One of Elliott's core principles, the five-wave impulsive structure, contains one of the strongest and most notable movements, the third wave. This wave is typically the most aggressive, the most liquid, and the one with the broadest participant involvement. If we consider that the current price action is moving within the third wave according to the Elliott wave structure, technically, the minimum target is expected to be the 1.618 Fibonacci extension level. This level is calculated upward from the end of the second wave correction. However, price action often doesn't stop at this level. The third wave frequently has the potential to extend to higher Fibonacci levels such as 2.0 or even 2.272. This kind of strong third wave movement represents the period of highest momentum in the market and typically coincides with times when investors take positions with great confidence, and many indicators provide positive signals. The current price behavior points exactly to this. When we look at the depth of the second wave following the first impulsive move, it appears to have ended within the classic retracement levels of 50%, 61.8%, or 78.6%. This is a typical second wave pattern and usually represents a strong bounce zone that initiates the third wave. From this point onward, the price gaining upward momentum is likely a strong signal that the third wave has begun. The third wave generally comes with a steeper and faster ascent. This is supported not only technically, but also from a fundamental perspective, because at this stage, significant confidence has formed in the market and participant numbers have increased. As buying pressure rises, momentum indicators such as RSI may approach overbought territory, but this typically indicates trend continuation. At the same time, volume data increases significantly during this period. The volume observed in the third wave is usually much higher compared to the first and fifth waves. This confirms the upward price movement. Reaching the 1.618 Fibonacci extension level may be a fundamental target for many investors.
However, as frequently observed in past examples, this level is often exceeded. The 2.0 and 2.272 levels are much more likely targets in this context. If the market structure remains positive, volume continues to support, and general investor interest persists, even surpassing these targets is possible. Especially the 2.272 Fibonacci level is frequently seen in strong third-wave movements and represents a level where price advances without entering short-term consolidation. This clearly shows the potential of the current price behavior within the larger picture. The possibility of price reaching the 2.272 level is not only a technical expectation, but also represents a psychological threshold. During the third wave, a significant shift occurs in investor psychology. Initial hesitant buying turns into enthusiasm. At this point, the market begins to act out of fear of missing out. Investors are no longer hesitant to increase their positions, and those left out want to jump on the train. This creates upward pressure on prices. That's why the third wave is not only the strongest phase in terms of price, but also psychologically and emotionally.
When comparing ZBCN and HBAR, it's important to first note that the foundational structures of both projects are built on significantly different architectures. HBAR is a long-established, enterprise-backed project known for its high transaction speeds and low costs. ZBCN, on the other hand, is a newer, more potential-driven project still in its development phase. This contrast highlights that ZBCN is at the beginning of its journey, while HBAR is a more mature, Layer 1 project that has reached a certain level of establishment. HBAR operates as the native token of the Hedera hashgraph network and utilizes directed acyclic graph technology, which offers higher scalability compared to traditional blockchains. This enables thousands of transactions per second to be processed quickly, at low cost, and with energy efficiency. Additionally, HBAR is governed by a strong council consisting of global giants such as Google, IBM, and Boeing, an element that boosts its adoption and inspires trust. Looking at ZBCN, this coin is listed on the ZKE exchange, supports various emerging ecosystems, and is gradually working to secure a stronger position among Layer 1 projects through its technical architecture. While it currently lags far behind HBAR in terms of trading volume, user base, adoption rate, and institutional backing, ZBCN's younger age and untapped potential position it as a serious growth candidate for the future. If ZBCN takes the necessary steps in the market, establishes significant partnerships, and continues to grow its community, it could potentially compete in the same league as HBAR in the medium to long term. Of course, this won't be easy, as HBAR is not only established in terms of price, but also in infrastructure, partnerships, consensus mechanisms, and regulatory compliance. However, if ZBCN presents a flexible, modular, developer-friendly Layer 1 architecture that targets niche areas where HBAR may fall short, it could close this gap. There is currently about a 3,300% difference in market capitalization between ZBCN and HBAR. If ZBCN were to reach HBAR's current market cap one day, it could yield approximately 33x returns for its investors. This would represent a 3,300% increase, a dreamlike potential for early-stage investors. However, expecting such a rise in the short term would be overly optimistic. For ZBCN to reach such a target, it would need to make significant progress not only in price, but also in areas like technical adoption, user base, decentralization, regulatory compliance, and more. Still, ZBCN achieving a massive increase like 3,300% and catching up with HBAR would not be solely based on technical success, but also shaped by timing, market conditions, macroeconomic factors, regulations, and competition. Therefore, while such a rise is possible, it must be emphasized that it would be very difficult. Not impossible, but extremely challenging, best describes this scenario. Reaching this level is indeed possible, but it would require patience, time, consistency, and strategic execution. One of ZBCN's strongest advantages compared to HBAR is that it remains largely undiscovered. This means there is significant room for price movement. Meanwhile, HBAR has already been listed on many exchanges, is on the radar of major investors, and may have reached a level of price saturation. In this context, ZBCN has more upward room to grow. Its unrealized potential may be reflected in price over time as the project advances and more announcements are made. Additionally, ZBCN's innovative solutions in the Layer 1 space and its low transaction fees that make development easier could help it reach broader audiences in the long run.
If ZBCN maintains its commitment to decentralization, builds user-friendly interfaces, enhances NFT and DeFi integrations, and diversifies its on-chain activities, it could attract more developers. As the developer count increases, so will the number of applications on the platform, which in turn will drive user growth. This chain reaction could lead to a growth trend similar to Ethereum's early years. In conclusion, while there is currently a large gap between ZBCN and HBAR, ZBCN has the potential to close it. If we remember that this gap represents approximately a 3,300% increase, it appears to be a highly attractive investment opportunity. However, expecting such an increase to happen immediately is unrealistic. This is a transformation process that can happen over time, and belief in the project, developer support, community growth, and technical milestones will be the foundation of this process. If everything goes smoothly, ZBCN may not necessarily replace HBAR, but it could reach a comparable level and gain a significant position in the sector. From this perspective, a promising roadmap can be drawn for ZBCN investors in the medium to long term. Of course, as with any investment, there is risk involved. However, the potential reward in return for that risk, when timed and strategized correctly, could be very large. The crypto market has shown this many times in the past and will likely continue to do so in the future. Therefore, monitoring projects like ZBCN, closely following their development, and creating strategic investment plans is very important. ZBCN must continue to develop its own project.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.